Hi guys, welcome to a trade recap video of me, Connor. For those of you who do not know me, I am a head community mentor here at IYF. I am also a funded trader through the IYF Traders process, and very fortunate to be one of the first guys to have gone through that process and completed it, coming out as a six-figure trader. So for a lot of you who know me, you'll know that I'm normally really active in the community. I'm trying to do a lot more. I'm trying to do a few sort of educational parts behind the scenes with the guys. And we're trying to produce some quality content for you guys. One thing that I wanted to start doing is creating some trade recaps for you. So for example, if I take a really good trade, I want to share it with you guys. If one of the mentors does, I want them to share it. And of course, if you guys have any trades you want to recap, put it in the chat and then everyone can obviously discuss it. And what I'll probably try and do is, if there's a trade that maybe, say, I see on the community, but I didn't take it myself, but I know that someone might not feel comfortable doing it, or maybe the RF guys, and obviously I'll then jump on, try it out and try and work out sort of what they was thinking. So this is pound Swiss. So I didn't take the long on this. However, when doing sort of back testing and re-journalizing and sort of looking at what I could have done, I found that I could have actually taken the long here. So what I've done is, I'm not going to worry too much about, you know, taking the profit at 75%, whatever. I'll explain sort of where I would have taken profit, etc. But I'll just keep it, the percentages simple in that term. So obviously this might be a little bit of a longer video, but I do recommend obviously watching it because I do think it's going to be valuable to you guys. I'm going to try and create these like 1 or 2 a week at least, but I can't promise anything. Sometimes you get really busy and then you kind of don't have time to do it as much as you'd like, but I'm always going to try and do as much as I can. And obviously if you guys enjoy it, let me know below, and I'll be more than happy to make some more in the future. So starting off, obviously I've just done sort of a recap here. So, you know, this was a 5.35% long. You could have taken using, you know, continuation. Then this was a sort of reversal RBO, which is a 9.82% using head and shoulders. Then this was a 12.26%. On here it's 11.81, so let me just change that. And then we have a 4.75%. So that's on long, total of 5.35%, and then short, we've got a total of 26.38%, which means overall it's 31.73% taken so far in June on pound Swiss. And if I'm honest, not really a pair I trade very often, but this month I have really enjoyed trading it. And of course, that's what you find when you're back testing. Certain pairs will provide really good results over a long term. Some might only provide well in the short term. So obviously definitely a pair I'm looking more to sort of look at, do some back testing on, and see sort of what I can find. So what I'm going to do is, I'm just going to break down each individual trade. Then we're going to move on to the next one and how I got that. If it's messy, apologies, I try and keep it as clean as possible, but sometimes it can be really hard to show all of your thoughts without having it on the screen. So what I'll occasionally do is, I'll just pause it, get the risk reward tool back up, get any objects that I had, and then of course I can speak through what I was doing. So now let's jump over to back to, I think it's the 4th of June, looking at the long opportunity. Okay guys, so coming on to pound Swiss, we are now using the bar replay on TradingView. So you haven't got TradingView Pro or Premium, I do recommend. I think I've got Premium, which is the second one. So I find it really useful, especially the intraday time frames. I think it's sort of cleaner, a lot easier. So yeah, now we're obviously looking at around the 3rd or 4th of June. So obviously here you can see we've just got this sort of uptrend that's developing, 1 touch, 2 touch, sort of 3 touch. And then of course we've got sort of this area here, market structure. So what I'm thinking is, obviously looking at this, we have got an area of, say, resistance here, and obviously trying to keep it as clean as possible. So we're using this dotted, and I've been using it lately, and I really recommend it. Just keep your charts really clean. So looking at this, you know, I'm expecting this to be some sort of reverse. At the end of the day, price is not going to reverse unless there's some sort of area of structure before it. So obviously using that, we got this lower, so it's higher formed. So low, higher. Now we're looking for a higher low. Obviously, I've kept my risk reward tool on there just to show you sort of what I was thinking. So, you know, 4 hour 50 MA, we've got the trend line there, and then also we do have a fib available. So if I place my fib from the high to the low, or sorry, low to high in this case because we're in an uptrend, then looking at around sort of 38.2 or 50%. Of course, if we can look at some market structure as well, potentially, there's not really much here. You know, we have a little bit here, which price doesn't really look to be interacting with. We have sort of some here, you know, it's lined up with 38.2, and then we also have sort of some area here with a 50%. So let's just see if price interacts with one of these levels. Okay. Okay, so let's just see if price interacts with one of these levels. So with myself, I am very price action based, but sometimes I will just take the entry on the fib, so I might not wait for price action confirmation. That's just something that I found I'm a little bit more aggressive with my entries. Okay, so you can see price is now stalling. Okay, so for me, this would be the key indicator here. So going back to price action confirmation, here I would have actually used it. So, you know, we've got the 4-hour spinning top doji. So for me, I would have entered there. So, you know, around the 1.20 so like I said, I didn't enter this trade, but this is what I would have been looking at, right? So if I now get my risk to reward, so something like that, I would have been wary of this 50%. So I probably would have had my stop loss below that. So let's just say around 612. So, you know, 56.3%. Take profit around here. So I know I said it was a 5.35%, but looking at it now, probably would have been more, say, 3.58%. So let's change this. If I can do quick maths, I can work that out. So 3.58, 9.82, 12.26, and then 4.75, around 30.41. So 30.41%, not a bad return at all. So yeah, so obviously probably looking more like that sort of risk to reward, to around 3.58%. Obviously stop loss is then protected below the 50 EMA. So, you know, now let's just see how this plays out after the 4-hour spinning top within this area here. Okay, so obviously after spinning top, we're just looking for some sort of more confirmation. Obviously there you can see price did try and go down, but it couldn't manage it, and now we're looking to sort of form some sort of morning star. Okay, so now price has now touched that trend line again. So, you know, we're now kind of just sitting around break even. Price is on that trend line again, so maybe further confirmation. Okay, now we've got this big bullish engulfing. So big bullish engulfing after the spinning top, and then we've obviously got this big candle here, leaving a bit of a wick, but I don't think that was the close. Okay, so it was the close. So you can see, if we just go back a second, you can just see the sort of big wick that was left. So price kind of, yeah, so you can see here, price kind of wicked up, touched our sort of resistance level, then come back down, and then you can see it sort of end up closing on it. Okay, and then we've got this big wick, and I'll take profit for field. So, you know, 3.58%, really easy trade, really simple continuation, nice 3.58% to start off the month. So see, that was the first trade that I took. So now what you could do, you know, you could turn around and go, you know, I'm going to now move this fib. I'm going to now look to, say, get another entry and go for the next continuation. Obviously, for me, because I knew we had this resistance, I wasn't really targeting any higher than the minus 27%. Obviously, it's just a clean area of structure. Don't really favour the pound, especially against the Swiss. I'm always looking to sort of sell the pound against the Swiss because the pound's obviously weak. Swiss is normally quite a strong currency, especially with sort of relation to safe haven of gold. So now looking at this, and you know, potentially you could have looked at it, but for me, apart from maybe that 50%, you don't really have anything really to go off of in terms of an area of confluence. So you know, we can see if it does play out at all. I'll just fast forward this bit because I know that I wouldn't have got a trade here. So you know, we're kind of seeing that reversal, big spin top, shooting star. Price then does push up a little bit higher. Looks like it's going to go long, comes back down, and then obviously we get this big bearish engulfing, you know, ruining that idea of any long opportunities. Okay, so we did get spinning top, and you know, before I did take the trade long, for me, there's just not enough confluences here. I don't like, obviously, there's not much room to run for me. I don't think we're going to come above that resistance level. So you know, I wouldn't have took a trade here. However, now looking at the next bit of price action, as you can see, I've got this arrow on the left shoulder. But arrow on the left shoulder there. This now looks like to me like a head. And now I'm starting to think my favourite thing when I'm looking for an RBO is a head and shoulders pattern. So you get the left shoulder just before, then you get the head, which is, you know, right in between sort of the trend line and the left shoulder. Then of course you're going to get the right shoulder that becomes your RBO style entry. So see, now you can see we've now broken it. We obviously had, now we can see we've made a lower high here, lower low, lower high, lower low. So now obviously we're looking for some sort of right shoulder. So, you know, where we're looking for this right shoulder, we get rid of this fib, we don't need it anymore. Place our right shoulder, we're looking for somewhere in line with this, right? And of course, because we've got this lower high, we can obviously place our fib. Placing our fib, we're going to place our fib from the high up here to the low down here. And we're just looking for the 38.2. Actually, maybe you could have had a lower high there. So, you know, looking at this, you know, 50% fib probably lines up nicely. Yeah, it's 50% fib there. So now what we're going to look for is prices to come into this area. I'm just going to put my risk to reward tool back on just to remind myself where the entry was. Okay, so you can see there we've got the risk reward there. I'm just going to remove the first one, but we know that's a 3.58% trade. So if I just remove this, you can just see obviously my entry was just on that 50%, and we're just going to see how this sort of plays out. So now we're rejecting that 4 hour 50. Of course, normally I would want to see price being below this because the head and shoulders have got that additional confidence. I'm more confident to take the trade. So now we're just letting the price sort of show its hand. It's very corrective here. Okay, so now, so obviously we can see here, price does now make that right shoulder. It's within an area of interest. It did touch my level. I always have my call levels just below sort of this area. I saw that obviously price was sort of rejecting this sort of minor resistance level. So just here, kind of rejecting that. And I think if you did actually have your fib from up here, I think it was a 38.2%. So it depends where you place your fib. You could have seen not that one before, it's not really a lower high. But yeah, you see the 38.2 really nicely there. So obviously now we're just looking for targets. Of course, I personally would target the start of the trend here, head and shoulders, duplication. It makes sense. I wouldn't really be too bothered about these fibs. I would just be more concerned about the entry. So obviously looking for this to play out now. Just fast forward this bit. We can just see price obviously now reached minus 27%. It's really nice. Then reached the minus 61.8 through there, and now we're just looking for that start of trend. And now we're starting to think about, you know, where can we get the next sort of entry? Obviously, with the funded traders account, you cannot hold trades over the weekend. However, you can hold trades on the challenge and the verification stages. So obviously with this one, probably would have been out by this point, but on say a personal account, I have 2 accounts I've funded in my personal. Obviously I would have stayed in this, but of course when I'm looking at a trade, I'm not just going to completely disregard my analysis. I want to make sure that my analysis plays out to understand and use the data effectively. So, you know, now we're looking at maybe we're going to get some correction potentially. I think we start to stall around here. So now what I'm going to do is I'm just going to look for where I know that my next entry was. So if I now hide this fib. Okay, so we can just see that I've got this risk to reward here. So you can see it's around the 50 EMA. So, okay, so what I think I was looking for is obviously now we've got this sort of new lower low confirmed. We can place a fib from this high here to this low. We're looking for sort of around, I think it's around the 50% fib in terms of where price could interact with the 50 EMA, maybe the 61.8. So you can see that's quite nicely. Then of course we do have this area of structure. So we have these spinning tops here, creating this liquidity here. So I think it was the 61.8. So we just let this play out and see how it gets on. Okay, so now you can see we're starting to develop a bit of a trend line. So you can just see here, we've got this trend line here. Of course, we went through it here and it did keep doing this, kept faking out. But what we can start to see is prices causing this sort of triangle. So it's this corrective sort of period where we've got sort of this support term resistance here, and then we've got this market structure. Then we've got this 50 EMA. You know, we've got multiple confluences here. I potentially would have looked at getting in the 4 hour spinning top, but because price was quite impulsive, I didn't really want to get my entry yet. Then we come into the area of market structures. You know, I waited. I thought, you know, minus 61.8. We closed on the minus 61.8. I'm pretty sure. Yeah, so we did. So yeah, I entered off of this, so it would have been the bearish engulfing candle, but I would have got the entry off of that 4 hour close. For me, you know, I just didn't really see it struggling. It does this a lot where I see a spinning top on the 4 hour 50 EMA, then it kind of gets impulse up. Then I actually took an entry here, so you know, it might have been a high risk entry, but sort of as you guys probably know by now, I do kind of get sort of, I try to get sniper entries. Sometimes play out, sometimes doesn't. But this would have been the entry here. Obviously 61.8, it just really fascinated me the way, you know, we had market structure, fake out 50 MA potentially, 61.8, really nice. And also it's a retest of the neckline, right? Because obviously the neckline being here, obviously that's a big confluence as well. So obviously going off that, you know, there's my second entry. So we had our stop 29.7 pips. So it was, I think it was about 100 pips above 20 pips above this area here. So I think obviously the 61.8 fib was there, but I think I just wanted it above, yeah, so around 25 pips above this sort of area of market structure. So, just in case we do have some resistance there. Obviously, that then got tested nearly got stopped out. I think it was about 10 pips away, but of course, only a 30 pip stop. But my take profit was just aiming for the minus 61.8, which was just down here. So obviously now this original trade, it might have still been running. This was obviously a scaling. However, for me, it was a full 1% trade because I was out of this trade on my funded. So now looking at this, price has now come back up. It's sort of stalling. Then we get this big bearish engulfing candle, broke through. Are we going to break through the trend line? So now, we've now broken through the trend line, validated that. We created sort of a lower low. Okay, so now you can see we've got this break and retest. You might have got another scale in there if you was waiting a little bit longer, but I was waiting waiting sort of more for sort of this entry here, so more the continuation rather than going off the RBO style, but you could have got an entry there, no doubt. Okay, so now we're looking for the next sort of, this is just playing out now. We're going to reach the minus 27%. When we reach the minus 27%, I'd then be looking for another potential entry because I know that we're going to get corrective phase. The way I like to see it is when price is retracing, I don't see it as like a time to panic and remove your sort of trade. I look at it as a chance for a scaling, which obviously then increases your sort of output of the trade, increases sort of the potential you have there. So, now we've reached the minus 27%, I'm expecting some sort of correction. So what on here I had was this sort of channel. So I'm just going to wait for price to develop a little bit more, then I'll start to introduce the trend lines that I had. Okay, so if I just pull up the channel I had just to make sure that it was the one that I had before. Okay, so you can see we've got this channel here. I'm just going to remove this fib now because, of course, we know where the targets are. So I'm just going to remove this fib. Then I'm going to obviously look for where was my fib that I had before. I'm pretty sure it was off of here down to here. But just to make sure that I'm sort of going with the trade that I had, I'm just going to implement it on here. So if you don't know what this is object trees. Basically, where you can hide all your tools. You don't want to try and fill up too much, but it can be quite useful. So I think this one here. But yeah, it can be really useful just, looking for them trades that you had before, looking for them areas. So it's really, really good tool to use. And that way, obviously, you can make sure that you're being accurate with your trades. You can make sure that you've got clean charts. You can make sure that, you can go back and journalize in the precise manner. So here you can just see this is the setup I was looking for. So we had obviously high to low. I'm just going to hide this risk to reward for a second, just so you can kind of see. And this one here. So obviously we then got the correction, so lower high here. Then we've got the lower low here, looking for a lower high to be created. So like I said before, we need an area of structure. So here we've got this sort of previous low, the lower low. We've got the sort of wicks here to create some structure. We've got the 38.2% fib from the lower high to the lower low. We've also got sort of this channel forming. So for a channel, what I'm looking for is something that I've introduced a lot more to my trading is these correction patterns or continuation patterns. So I'm looking for, one touch, two touch, three touch, and then to the downside. So that's sort of more two touch actually. So something more like, one touch, two touch, three touch, then to the downside. I'd look for entry upon this part here, so the third touch of the channel, where some people might go for the RBO style instead, but that is normally how the continuation pattern would work. So now if we just continue playing this, we're going to look to see if we can get that third touch for the entry. Okay, so we've got the one touch, we've got the two touch there. That could convince some people. For me, I was waiting for the third touch, just sticking to my plan. Then we get the second touch at the bottom of the channel. Then we're just looking for that third touch of the top. So, here, some people might have saw that as, it's nearly touched it. For me, I want to be precise. I want to make sure that I'm doing it correctly. So therefore, I'm just waiting for that touch. So I was looking at 762 as my stop loss, 1.18762. So, 20 pips above the fib, 10 pips above the 50 EMA. So, protected really well. Obviously, if it does break above that, then it's invalidating its continuation pattern, and therefore it's no longer valid. So, targeting the minus 27% here, just purely because obviously this correction, and it has dropped a lot. So I'm expecting some further. So I was only aiming for that. Obviously had the other trades as well. So then going through this, would have got my entry off the third touch. I would have got my entry probably as we finished and closed here. So it's probably more this one here. Sort of really nice straight away, got a really, really impulsive candle. I believe that's the trade that I put into Slack. Yeah, so that was the trade I put into Slack. I think I was doing a gym workout at the time, so it was a little bit of a phone, or it was a phone chart, but by all means, I knew where my area of confidence was, therefore I was just using a phone chart just to confirm the entry because my alerts went off. And that's the important thing. I can go do a gym session, I can do my work, I can continue with my day. And then obviously when a price alert goes off, I can spend 5-10 minutes looking at it. I know that the 4-hour close was coming, so obviously I looked waiting until the 4-hour close. Then I would have got into the trade, and that's the key there. I got into trading for freedom, right? I got into trading so I could do whatever I like, and obviously when my alerts go off, I can then take the trade. But I don't have to be sitting in the charts all day. Of course, if you're a scalper, that might not be for you. You might obviously prefer sitting in the charts. Also, what I find with a lot of scalpers, they have the free strike rule, so I'm looking for free trades, which means obviously they're probably sitting there waiting for a trade opportunity and getting in. Of course, the supply and demand stuff, again, you might be a little bit more on sort of the lower time frames, maybe more 30-minute, of course, but you're probably going to trade sort of the sessions as well. So therefore, you're not really going to fit this style of, waiting for call alerts and things like that. But that was sort of just a little bit about, why I got into trading, for the freedom in terms of, I can do a gym workout, spend 5 minutes quickly looking, and then obviously get back to what I'm doing, get the entry, and then, finish the session, and then we're in a really nice profit. And I was like, oh, perfect. And, would have been at like 1% by that point. And that's the thing. Obviously, I do get quite nice entries which allows me to have small stop losses. And that's because I wait for my areas of confidence. If I don't get an area of confidence, my alert doesn't go off, and I'm not alerted to even look at the trade. And that's what I'm trying to do at the moment. I look. I do my analysis on a Sunday. Monday, I'll have a little skim through, have a look what's going on, but just to keep myself aware. Then Tuesday, I'll reevaluate my charts, take any pairs that aren't really valid on my watches anymore, and then look at obviously setting my price alerts from the Tuesday, because that's when I'm looking to trade from Tuesday to Friday. Lately, I've been trading mainly on a Thursday and Friday, and that's when I've had some really, really big wins. For example, the pound Swiss on Friday, and I had pound yen as well. So going back to this trade, obviously we can let this continue now. Nearly finished with the recap, so thanks for staying with me this long. Okay, so you can see prices, you're starting to correct, but I'm not really too concerned at this point. I know we've got this trend line here. To break it, we need to get that momentum. So we gather some momentum here, and we're just sort of stalling. And I think we did break it really convincingly. Yeah, so, we break it convincingly, and I think this is sort of Monday. I think we finally actually crossed the line here for the minus 27%. So hopefully some of you guys caught that. Just waiting for this to finally touch it. Yeah, there we go. So, I think obviously coming back to the modern day, we are, just sort of corrective at the moment. But if I get all them risk rewards back up, okay, you can see from these risk rewards, you can see 1, 2, 3, 4. So obviously 4 trades over 20 days, around 30% return. It's not too bad at all. So obviously that's a trade recap. That's why I sort of took the trades, how I done every one. Obviously, as I said before, you would obviously look at taking 1%, or sorry, moving your stocks to break even. I don't know whether I don't think that would have affected any of them. It didn't for me. I know that. Of course, if you did, then you might have looked to re-enter, like we did on pound CAD. And I think for me, the most important part of this was I was sticking to my plan each time. I had a strict area, strict place I was looking for, and obviously got some really nice trades out of it. So hopefully this has helped you. I'm looking to do some more. I'm going to probably do one on pound yen as well. If I have a look. So pound yen hasn't really fulfilled anything yet. So when that sort of completes, I'll then do that. I'll probably cover the one that I had from the other week with the right shoulder, because I know that was quite a nice trade. A few people got in. And then I think there's a pound New Zealand trade that the IYF boys got in that I managed to get in as well. So obviously I'll try and get into that and do a recap on that. So let me know your thoughts down below, whether you enjoyed this video. Those of you not within our Slack community, not within the community, please do get in touch. This is all the stuff that I've learned through IYF. This is the process that I followed, the strategies I've learned, and my adaptations of the strategies. For those of you who are in the community, keep on doing what you're doing. Obviously, hopefully my story does inspire you. At the end of the day, I do work really hard with you guys in the community. I do obviously a lot of mentoring and stuff to make sure that you guys are ready to take the challenge and obviously absolutely smash it. So have a great rest of your day. Obviously, if you want to see more of these, please let me know. Please let me know how you found it. Feedback's important. I know it's a little bit of a longer video, but I think it's really important you understand each individual point of why I took the trade. So obviously going back to pound Swiss, obviously that was the trade, nice 30%. Like I said, I might have not taken them to the T. I didn't take the first one, but obviously I did take these 3 trades here. So of course, I look forward to sort of speaking to you guys in sort of Slack and everything, and hopefully I'll catch you guys in another video.